Good morning everybody, and this is your S&P 500 day trade setups for today. So just starting off on the weekly, I just want to pick up these weekly levels. Actually, I'm going to pick up on this one here. That is your line in the sand to the downside, and obviously you've got a little bit of a level there. And at the same time, we've got this area just above 4,000 here, which was 40.32. So right now we have got a gap down, a bit of noise coming out of China. There's a lot of protests happening related to the COVID lockdown that they still insist on doing. So we do have two major levels here, and in between this we have got a few levels as well. And I think this is the one that I would be paying attention to, is right here. So that's at 39.89. Again, in amongst all of this is 4,000. And we're at 4,000 at the moment. There is a level there. You can see there it is there. So those are the four levels I'm looking at today. We are in an upward trend. Oscillators are good to the upside, so I'm not too keen on just jumping in at the moment. Want to see some kind of a pullback before getting involved in that. And the last thing I want to do here is just do that. I just want to extend this through to the bottom here, and you can see some kind of interest has been given to this diagonal as well. So right, that's kind of the structure we have at the moment. So only problem that we do have is that we've got the oscillators grouped to the upside like they are. So if we start drilling down through the time frames, 3 hour they have separated, coming into an area which is of interest. And I think we must just delete this quickly. There's two. There's one all the way down there. That's very far at the moment. Then that one. But not too interested in that one. I just want to do that. Okay. Don't want to be making decisions off this diagonal, but wherever we intersect the horizontals, it is an area of interest. So we are hovering at 4,000. Obviously that is going to be a big level. You can see it has been the past couple of weeks. Oscillators have eased off, so I'm looking for an area of support. Could be where we are now, or it could also just drop down to 39.89. So yeah, nothing more that's showing itself on the hour, apart from the fact that the oscillators are now truly grouped to the downside. And I think what you actually need to do here, that's the actual level there. You can see we do have an inside bar off it. So there is something brewing here. What you're looking for is a 1 hour close above 4,007. That would validate this inside bar, but I'd wait for a second signal. So in other words, you probably find it, if it does happen, it'll bounce up a little bit, and then we'll come back in the European session. And then should be this gap should be a magnet as well. That's the first scenario. Second scenario is going to be down here at 39.89. If we do drop to 39.89, I'd be watching 4,000 like a hawk, because if we reject that, then expect another attempt at 39.89 and probably move down to 39.57. There's a lot of support that would be in this area, and in fact I'm not so sure we'd even get that far. You'd probably be capped by this here, so 39.67. Okay, so let's just get the 15 minutes and just see if there's anything else that we need to be paying attention to. Nothing just yet. And you can see that hour is now a pin bar. So if the markets were open, this would be a perfect opportunity for a long, right here where we are, with a stop just below this pin bar. So it's a 50-point stop loss. But being after hours, I'm a little bit cautious with that. And we also still have a gap open here. Yep, so the pin bar did not close the gap. There's a gap there, and then there's another gap a little bit lower down, closer to this this level here of 39.89. So pay attention to the European Open to start with. You want to see some form of structure here. So I'd want to see some kind of a second attempt at 4,000, and 4007 is probably the safe bet. If you can get some support above there, then you're looking for a long. You're probably looking at about 100-point stop loss, and you're looking for a 200-point gain. I suspect we're going to target that gap, but then this 4032 is the area of interest after that. So if we reject that, we should come back down to 4,000. So that's kind of the view that I've got at the moment. If we do drop below 4,000, as I said earlier, then pay very close attention to these levels. You probably find buyers come in, but I would expect sellers at 4,000. That would be a reverse of the trend, should I say. So that's kind of the view that I've got at the moment. It is going to be volatile still. It has been for 2 weeks, so I wouldn't expect anything else. And the other thing that you've got to bear in mind is on the daily we are oversold, so you'd want to see us come back and test the moving average breakover. We've only just got the daily crossover here on the faster moving averages, the 155 EMA. We are still just hovering around at the moment, so lots going on. And also bear in mind that this could also be a pretty big wedge, which would then give us a 8,000 point move to the downside if it does play out. So not out the woods yet. I think you just need to be very careful about what you do. Keep those stops tight. Pay attention at the moment. Right now the trend is up, so you want to be going with the trend, but you want to be buying off support. And this is the first area of support at the moment, but don't do it before the market opens. Wait for Europe to open and then take your cue from that. Anyway, hope that helps, and we will catch up with you tomorrow morning. Cheers for now.